Hello traders, today is the 28th of February. My name is Neville Hornsey, market and trading, and today I will take a look at the week ahead. Okay, as always, start with the YouTrading.com Forex Heat Map. We can see that the euro is the weakest currency at the moment. The Swiss franc is the strongest, closely followed by the yen, Chinese yuan, and the US dollar. So for me, this is more of a risk-off start to the week. We're sort of seeing commodities, especially the Canadian dollar, weakening. Euro, obviously, very closely positioned to the troubles in Ukraine and Russia. So we're seeing problems there. Going back to Russia, this week's going to be obviously moved by news headlines rather than necessarily fundamentals. So currently, there's runs on Russian banks because some of them are being removed from the SWIFT system, which allows encrypted transactions to go between different banks. So essentially, we're cutting Russian banks out of the global financial system. But we're also sort of seeing that the Russian central bank is being affected, and they're having to raise rates to 20% now to try and stop inflation and also to try and stabilize the ruble. If we go to some news headlines here, obviously, over the weekend, we heard that Russian President Putin placed his nation on high nuclear alert. So that's obviously a big worry geopolitically, and will focus the minds of the delegations that are speaking today and hopefully for the rest of this week to try and work out some sort of compromise between Ukraine and Russia. If we go back to, the sort of the fallout of what happens when a central bank has to do some extraordinary monetary policy. Back here, long-term capital management was a highly leveraged hedge fund. They were bailed out for $3.6 billion in 1998 after the Asian and then Russian financial crisis. So in 1998, we saw sort of similar things where we had the Russian central bank raising rates to try and basically stabilize the currency, and then that had a knock-on effect which led to LTCM being bailed out. So this week, starting off today, Monday, February the 28th, not a lot of scheduled news which would move the markets. It's all been about the actual geopolitics, the news, the headlines and things like that. But going to new month, March, starting with the Australian cash rate and RBA rate statement. So if we go to Active Trader, got the Aussie dollar weekly chart. See that we've been making several green candles, weekly candles. So we started off green today, having dropped down in the sort of overnight session at the market open. The RBA is expected to keep their cash rate target unchanged at a record low 0.1. Obviously, their neighbours RBNZ have raised their rates to try and stop inflation. And we'll talk about that in a minute. Going back to the calendar, after the RBA, we then hear about GDP from Canada. Obviously, they've had disruptions from the truckers and the blockades across borders. So economic activity is probably diminished a little bit. And to be fair, it's expected to come in at 0% for the month, down from 0.6% from the previous. We do have Pound member Saunders speaking from the Monetary Policy Committee from the Bank of England. That's at 6:30 p.m. after the London close. So Pound might be affected by traders waiting to hear what Saunders has to say, but generally the pound will be moved by what's going on in Russia for the next couple of days at least. Going to Wednesday, March 2nd, Australian GDP quarter on quarter. I mean, assuming that the RBA do not raise their rate, this GDP figure is probably not going to move the Australian dollar. I'm expecting the US dollar to move the AUD versus the USD more than anything else. Looking down, we've got a European CPI flash estimates. Obviously, if Euro estimates come in higher, 5.4%, which would be more than the previous inflation rate, then that could encourage traders to sort of try and get ahead of the ECB tightening monetary policy, which could then strengthen the euro, which would then lead to the US dollar coming down, which then may give commodity pairs like the Aussie a bit of a boost. But, so in the morning on Wednesday, we'll have a better idea of which way the euro and the dollar are going. Though we do have things like ADP, non-farm employment change, and an FOMC member speaking on the Wednesday before we get Fed Chair Powell testifying. So the US dollar itself is probably on Wednesday not going to move that much until after Fed Chair has finished his first day of testimony. But we do hear from the Canadian overnight rate. So if we go to the active trader, go to say dollar versus the CAD, which is here. Now, currently 68% of traders are trying to go long, but we did have a big weekly bearish candle last week. I'm expecting to see the dollar come down and the Canadian dollar to go higher on the oil. But in terms of this BOC rate hike, they're expecting a 25 basis point rate hike that could obviously strengthen the Canadian dollar. And we could see this dollar CAD come lower, especially if oil stays relatively high. All right, going further down, crude oil inventories, obviously coming after OPEC, their meeting. So if we go back to the active trader platform, go to Brent, say, the OPEC producers are expected to keep 400,000 barrels per day hike coming in coming months. So far, obviously, they have to worry about what's going to happen with Russia. They have to also worry about what's going to happen with Iran. If there's an oversupply from Iran and for whatever reason, the Western countries and the rest of the world don't cut off energy in buying the energy from Russia, then it could be in a position where we have oversupply, though some OPEC plus members are struggling to actually meet their quotas. So again, it's in the balance. Nothing's guaranteed, but whilst prices are this high, US frackers and people that like have a more costly sort of business, that they'll be trying to make as much oil or get as much oil out of the ground as they can whilst prices are this high. And we're not even seeing any hedging really sort of coming into the markets yet from the producers. So they're expecting to see higher prices, especially with the Russian-Ukraine problems that are going on. Moving down, so Thursday, Fed Chair Powell still testifying, though most of what he said the day before will be just reiterated on Thursday. So that's not really going to be US dollar moving unless he pulls something out of the bag. We do have ISM Services PMI on Thursday, the 3rd, but on the 1st, we've got ISM Manufacturing PMI. So if we just look at the manufacturing PMI, that's expected to sort of reverse this recent downtrend, expected to come in at 58, so above the 57.6 from last month or beginning of this month, February. So it'd be good to see that happen. Obviously, if we get a dip lower than 58 and don't meet expectations, that might actually weigh on the US dollar, as this trend is definitely from a year ago now, sort of showing that manufacturing PMI is coming down. I mean, I'd like to say that the focus of the week would be the US non-farm payrolls. Obviously, we've got ADP employment change that came in at minus 301K last month, whereas non-farm came in at 467, along with a lot of revisions for the season adjusted data. This reading is supposed to come in slightly lower than 467 at 400K, whereas ADP is supposed to go a lot higher, considering what it was the previous month. We just have to wait and see. The data seems to be all out of whack at the moment. But as I said last month, I'm expecting the ADP and the NFP to sort of converge in terms of their levels. So maybe just under 400K would be about right. Obviously, if it comes in under 400K, or if I go back to the active trader platform, go to the dollar index, I wrote here, if it comes in less than 381 or more than 400, then I think that would be market moving for the US dollar. If it's less than 381, then I think the dollar gets weaker. If it's above 400, the dollar gets stronger. And that's about it, really. I mean, obviously, you have to keep your eye on the news headlines, see what's going on. In terms of Russia, best to keep your eyes out on especially the euro and the dollar news events on the calendar. It's hard to get into a trade and expect it to trend at the moment because the volatility is so high. If we just look at the volatility index on Active Trader platform, we can see that it's at 30 dead on. It has spiked up towards 34, I think it was. Obviously, nothing like it was back in the pandemic days, but at this elevated level, we are seeing the ranges expand. And yeah, if you're a range trader, that's probably quite good because the range is just getting bigger. But if you're a trend follower, then you're probably getting chopped up quite a lot. Okay, good luck this week, and I'll speak to you again tomorrow.